Welcome to the Money Mind. Tonight, we're covering Robinhood, ticker HOOD, which surged over 10% today and is up an incredible 26% this week. The reason? The SEC just killed the pattern day trader rule, and it's a game changer for retail investors everywhere. Let's break down what happened and why Robinhood is the biggest winner. So what exactly was the pattern day trader rule? It was a regulation from 2001, created in the aftermath of the dot-com crash. The rule said that if you made 4 or more day trades within a 5-day period using a margin account, you had to maintain at least $25,000 in equity. If you didn't, your account could be frozen for 90 days. For 25 years, this rule has locked millions of small investors out of active day trading. If you had a $10,000 account and wanted to trade actively, tough luck. The $25,000 barrier kept everyday traders on the sidelines. On April 14, 2026, the SEC officially approved the elimination of the pattern day trader rule. This is a landmark reform. The old system simply counted your trades and punished you for being too active. The new framework under FINRA Rule 4210 replaces that with real-time, risk-based intraday margin calculations. Instead of asking how many times did you trade, the system now asks, what's the actual risk of your positions? This means no more trade count restrictions, no more $25,000 minimum, and no more account freezes for active trading. The full rollout across all brokerages is expected between mid-2026 and early 2028, but several platforms have already announced plans to launch PDT-free accounts as early as next month. So why is Robinhood the biggest winner here? It comes down to their user base. The average Robinhood account balance is significantly smaller than traditional brokerages like Schwab or Fidelity. That means a disproportionate number of their users were directly impacted by the $25,000 minimum. Goldman Sachs has already come out and said Robinhood stands to benefit the most from this regulatory shift. More unrestricted day trading means more transactions, which means more revenue from payment for order flow. And it's not just about existing users. This opens the door to a wave of new signups from people who previously couldn't trade actively. On top of all this, Robinhood reports Q1 earnings on April 28th, just 2 weeks away. Analysts are expecting earnings per share in the range of 45 to 49 cents. That's another major catalyst on the horizon. Robinhood wasn't the only stock that surged on this news. Webull, trading under the ticker BULL, jumped nearly 9%. eToro, ticker eTor, rose about 5%. But Robinhood led the pack at over 10%, and for good reason. The platforms with the smallest average account sizes are the ones that benefit the most, because their users were the ones most restricted by the PDT rule. This is a structural advantage for Robinhood that the market is clearly pricing in. Let's zoom out and look at the bigger picture for Robinhood. In 2025, the company grew revenue over 50% year over year with strong free cash flow. Equity trading volumes in January 2026 were up 57% compared to the prior year. And here's something really interesting. The U.S. Treasury recently selected Robinhood alongside BNY Mellon to serve as brokerage and trustee for the Trump Accounts program, a government-backed initiative providing investment accounts for newborns. That's a significant institutional vote of confidence. Now, the stock is still down about 24% year to date and is trading 42% below its 52-week high of $152 from October 2025. So, there's a real argument that even after this week's 26% rally, there's still significant upside if the fundamentals continue to improve. Looking ahead, here's what to watch. First, the Q1 earnings on April 28th. Will trading volumes reflect the excitement around the PDT rule change? Second, the implementation timeline. Brokerages are expected to roll out PDT-free accounts between mid-2026 and early 2028, so this tailwind isn't going away anytime soon. Third, monthly operating metrics. Watch for trading volume increases in the coming months. Fourth, competitive positioning. How does Robinhood differentiate against Webull, eToro, and the traditional brokerages? And fifth, the recovery path. Can HOOD reclaim that $152 high from last October? That's your breakdown on Robinhood and the death of the pattern day trader rule. A 25-year-old regulation has been eliminated. Day trading is now open to everyone regardless of account size, and Robinhood is positioned to be the biggest beneficiary. The stock is up 10% today and 26% on the week, with Q1 earnings just 2 weeks away. If you found this analysis valuable, hit that like button and subscribe for daily market breakdowns. This is the Money Mind. We'll see you tomorrow. And as always, this is not financial advice. Always do your own research before making investment decisions.